Thank you for joining me. I'm Alex, and I want to talk about InMode because of popular demand. So I covered InMode before, and it's actually the first video that someone told me to make another video on, knowing that I had a video on it. So InMode makes medical equipment, both end user and for doctors, and it's obviously a very interesting company, and there's obviously the market for it here in the US. Wouldn't go so far as to say it's very international, but that's kind of a point of contention there. Current price $28.61, which gives them market cap of $938 million. They had a recent low of 17 something, and so obviously they've grown 50% from there already. So obviously this is not their all-time low, and that shouldn't deter anyone from buying it though. Dividend is 0. I wouldn't expect that to change in any time frame that you care about. Revenue $156 million, up from $100 million. Their growth rate went from 100% down to only 50%, which is still amazing. Earning $61 million, up from $22 million, so basically tripled their earnings, which is amazing. Current PE is 23. Forward PE of 33, so they're expecting their earnings to go down, which is kind of a problem, but I would say the long-term outlook is far more important here. Total assets $218 million, total liabilities $39 million, which gives them a total stockholders' equity of $176 million, which apparently they've quadrupled since the previous year, which again, amazing. So overall, I would say that obviously things are going in the right direction on literally every single stat that they post. Forward PE is kind of concerning, but obviously in the current situation, forward PE kind of means nothing anyway. So overall, I would say that obviously for a dividend investor, there's nothing here. For a value investor, the PE, especially the forward PE, is going to be kind of high. The balance sheet looks amazing. The revenue growth is amazing. And so I think it looks pretty interesting for a value investor, at least for a small speculative investment or diversifying the portfolio. And for a growth investor, obviously revenue growth of 50% is amazing. I would not be surprised if they can keep that up. It's kind of easy to scale when the company is kind of in the mid-range of things, where you gain name recognition and word of mouth spreads your information far and wide. It's kind of hard to grow from very small, and it's obviously very hard to grow from very big, but that mid-range, kind of the sweet spot they're at, which is where most of the growth happens. So for a growth investor, I think this looks like a very interesting company, and I would be very happy to buy it at this price, even after they gone up 50%. The revenue growth of 50% is just too good to pass up. The balance sheet just looks too amazing. The earnings tripled in 1 year. Even if they go back down to what would give them a PE of 33, 40 million-ish earnings, which would still be double the previous year. So obviously things going in the right direction, and I think it's a very interesting company for a growth investor. That's it from me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.